How have regulatory changes affected crypto exchange platforms in 2025? Breaking news in the world of cryptocurrency. In 2025, regulatory changes are reshaping how crypto exchange platforms operate. If you are curious about how these changes impact your trading experience, you are in the right place. Let's take a closer look at what is happening. This year, new regulatory frameworks introduced by United States authorities have focused on increasing transparency and protecting investors in the cryptocurrency market. A significant development is the proposed Generating Effective New Investment in United States Act. This legislation targets stablecoins, which are digital assets pegged to traditional currencies like the United States dollar. If passed, this act could help stablecoins become widely used for payments and investments. However, concerns about potential risks to consumers and the economy remains. Additionally, a draft bill has been introduced to clarify the roles of regulatory bodies, such as the Commodity Futures Trading Commission and the Securities and Exchange Commission, regarding digital assets. This bill aims to define regulatory responsibilities and establish boundaries for decentralized finance activities. This will directly affect how exchanges and related platforms operate within legal frameworks. In practice, these regulatory changes have led to stricter compliance requirements for crypto exchanges. This is especially true for stablecoins and the listing of new tokens. Exchanges must adjust to increased oversight, which impacts liquidity and the speed at which new tokens can be introduced. As a result, trading volumes and market volatility have shifted as participants adapt to these new rules. Security incidents have further intensified regulatory pressures. For example, in early 2025, Femex Exchange experienced a major security breach, resulting in losses between $70 million and $85 million. This incident highlighted vulnerabilities in hot wallets and led to temporary withdrawal halts. Exchanges are now compelled to enhance their security measures under regulatory scrutiny. Institutional participation has also been affected by these regulatory shifts. The Securities and Exchange Commission's approval of combined Bitcoin and Ethereum exchange-traded funds has significantly boosted institutional interest and trading volumes, especially in derivatives markets. On the other hand, regulatory clarity around decentralized finance has improved after the Securities and Exchange Commission dropped an appeal against a court ruling that favored decentralized liquidity providers. This has encouraged growth in decentralized exchanges. Moreover, traditional financial institutions are cautiously entering the cryptocurrency space, driven by regulatory easing. United States banks are exploring crypto-related activities such as custody services and stablecoin issuance. However, they are seeking clearer anti-money laundering rules and consistent guidelines from regulators before expanding further. Ongoing pilot projects and partnerships signal a gradual integration of crypto trading into mainstream finance. In summary, regulatory changes in 2025 have increased oversight and compliance demands on crypto exchange platforms. These changes are driving improvements in security and transparency while influencing market dynamics and institutional adoption. The development of stablecoins is also being shaped significantly this year.